Hey, what's going on, everybody? Good morning, good evening, good afternoon, wherever you are. I'm King Wabi, and welcome to another episode of Crypto World Radio. If you're listening to us from YouTube, feel free to leave some comments for any feedback. And if you enjoy this kind of content, click the bell notifications after you click that subscribe button, and you'll be updated whenever content like this is provided for you all. We have content anything from the equity markets and also the crypto markets. And if you guys want to be part of our community, right, the Discord link is up above if you're here on Twitter Spaces. And just letting you know that for my people that are in here from my prior spaces, I'm doing all of my crypto specific content here on Because Bitcoin. And today, our special guest to start off the new year is Trader XO. And me and XO have been friends for about a year now, and I want to welcome him on the show. I know he's a prominent figure within the trader community, and he's an individual that combines his crypto trading along with some macroeconomic stuff, of which I've learned a lot from, especially when me and him started connecting more in the springtime, and so much so that we developed an insider called Operation Killwind. So, XO, without further ado, I want to welcome you on, brother. Good to have you here. It's been a while since we've been meaning to get on a call since like September, but good to have you on here. How you feeling today, my man?
Hey, Wabi, how's it going? Thank you very much for having me on board today. It's my first space of the new year. I hope you're keeping well, and all the listeners, thank you for tuning in. I'd like to wish you all a very prosperous and blessed 2023 ahead. Um, I'm doing okay, thank you very much, Wabi. I've just been relaxing, to be honest with you. I know it's the start of the new year, and many participants are excited about the market. There's a lot of divide between, are we going to see an absolute horrific bear market over the coming months? And then you've got the other side, which is talking about, well, we think crypto's bottomed out. How much worse can price get from this point onwards? Surely these are good investment buying opportunities. So there's a real good segregation of opinions and a real divide out there between various communities. And I think what's really been fascinating for me is just watching this all play out over the last 18 months and really trying to absorb as much as I can from a macro perspective. Because you have to remember, um, this is the first time that we're seeing a recession in almost 14, 15 years. So you'd have to be older than 37, 38 with trading experience to have experienced the great financial crisis. And we've seen many macro analysts try to read this space over the last year and a half, and it's been very, very difficult. But thankfully, for those of us who trade, I think we're slightly more tactful, and I think that's probably going to be the case heading into 2023. It's going to be very rough waters out there from an investment perspective, and it's certainly going to be challenging for anybody who's new to trading. But apart from that, I'm very excited. How about yourself?
Well, man, I think going into the summertime, I think the second half of 2023 is going to provide a lot of good opportunities, especially like when the rates kick into the economy. I think we're going to have that quote unquote final leg down, or as me and you like to call it, the grand finale exodus of Operation Killwin. And originally, I had thought that the FTX event would kick that off, but as many individuals know in the space, FTX had absolutely zero BTC or Ethereum. Most of their holdings were actually in Solana. And so I want to see what happened in Solana happened across the majority of the assets in the digital token space, whatever you want to call it. And I think like second half of 2023, I think we'll get that opportunity. And it was guys like yourself that had taught me certain people to look at, whether it's like cross border capital or even tuning into some of the content that you put out, sir. So it's definitely helped me, especially after I almost got absolutely fried in May, but thankfully by the grace of God I escaped. And since then I've been more cautious, but I think once we see the Nasdaq trade under 10K and the S&P start trending towards pre-COVID highs, I think I think there's quite a few things that I'm looking at. But like you remember in 2018, there were a lot of projects that we all loved and adored, and they just did not perform. They just did not perform relative, to the newer tokens, or even compared to BTC. They just stayed flatlined. I remember being like an EOS fan, so I'm kind of like just looking forward to new narratives, man, that aren't taking part of Operation Killwin. And brother, I wanted to ask you, um, what brought you into the crypto space? I know you put out a tweet today that says that today marks your 7th year as a trader. So, what brought you into Bitcoin and crypto, brother? If you don't mind me
Yeah, of
asking,
course.
I'd really love to know
I
that.
was very fortunate, to be honest with you, because obviously I majored in computer science and mathematics. So I worked as a software developer for many years, and then as a software developer in investment banking, working on trading systems. So I'd heard of Bitcoin. I never understood what it was. I just thought it was some payment mechanism. Sometimes you can go to your local superstore and buy these like pay tokens or coupons that you can use on the internet. So initially, I considered it to be one of those payment types. Then it wasn't until my elder brother pushed me into buying Bitcoin and to really take a look into it that he really encouraged me in 2016 to go out and buy some Bitcoin and just hold on to it for the next 10 years. And ever since then, I just become obsessed with the whole crypto space. And as most, new entrants within the space, you start YouTubing Bitcoin videos and you see all these hedge fund managers talking about the fact that Bitcoin could go to $100,000 in the future. In 15, 20 years' time, it could be worth $1 million. So then I'm thinking in the back of my head, God, I need to get 10 Bitcoin. And back then it was around about $1,500. So it wasn't too expensive. And I had a pot of cash. I thought, okay, you know what? Let's take a chance. It's going to cost me $15,000. It could become $1 million in 20 years' time. And I'm there trying to count, I could become a multimillionaire. So that's kind of the initial excitement and my entry into the crypto space. And then lo and behold, I didn't realize there's a world of shitcoins that existed on Poloniex, Bittrex, Cryptopia, and all the other smaller exchanges, which I kind of discovered in 2017 from just watching a course on Udemy. I think it was Michael Superman, if those of you who remember. Yeah,
Supo man,
2017.
I haven't heard that name in such a long
Yeah,
time, dude.
it's
The Supo
oh
man.
man, I used to love it. So there was Superman, there was Data Dash. I was trying to learn how to trade using Fibonacci's, using horizontals, understanding what Elliott waves were back in 2017. And the best part was I really bought into the whole narrative. Like, you've got to buy Stratis, you've got to buy Neo. Neo's going to be a $5,000 coin. And you don't know any better because you're buying these altcoin projects at $2, $9. I remember buying Neo at $9. I remember buying Amigo at 50 cents. I remember 10x or Pay at 25 cents. I even bought Z Classic for about $7, which went to 140, 150. So I was none the wiser. I bought into the whole narrative that, yeah, these are long term investments. I'm holding on to these. And my brother was telling me, no, you need to sell. You're not holding these for investments. Just get rid of them. They've gone up. And I was like, no, I was absolutely adamant that I would hold on to them because of the tech. Because Stratis was a brilliant L1 for C Sharp developers, and it's the future of blockchain development for C Sharp and Microsoft, and I'm holding on to it. But no fucking comment. The rest is
Yeah, people.
history. The rest is history. And having suffered so much pain in 2018, honestly, I think I went from something like 5 Bitcoin to almost over 100 Bitcoin in the space of 6 months, just holding shit and trading shit coins. I had about 25 altcoins across the board, and I considered that to be my portfolio. And then 6 months later, that 100 odd Bitcoin that I had or accrued in value, not realized Bitcoin, kind of got sliced and diced all the way back down to 25, 20 Bitcoin. And then, you fall into the pitfalls of, right, I need to learn how to leverage trade. I need to learn how to short the market at the lows, and you lose some more money. And you kind of do full circle, and you get frustrated with the fact that you've learned TA, you think you're a genius, you've quit your job, you've caught a bull run. Yeah, I want to be a trader, but good Lord, that was just the start of the journey of trading for me. And I think the reality set in when I took some huge losses in 2017. Thankfully, I didn't take I wasn't ever in a significant loss. I did take big losses, but at the end of the day, I still managed to take some profit. I started off with around about 2015, 20,000 and managed to walk away at the end of 2017, well, mid 2018 or late 2018 with about 40, 50K to my name. So it was a harsh lesson. It was an expensive lesson, but I think at that point onwards, I was just ultimately driven by not believing or buying into the bullshit that people push out there, not into any narratives. I was more so frustrated with kind of the community. Like I couldn't accept the responsibility that this is all my fault. I kind of got pissed off with the fact that so many people out there were just pushing Bitcoin, 8Ks a buy, 10Ks a buy, 12Ks a buy on the way down. And I thought, stuff this. I'm going to learn how to trade properly, not just using basic SR, but truly understand price action, understand narratives, and just really came into my own thereafter. So it's been a whirlwind journey. It's come with a lot of emotion, a lot of pain, a lot of happy days, a lot of success. But yeah, it's been one hell of a journey. It's to where I am today. But I have zero regrets. In fact, if anything, I absolutely loved the 2017, 2018, 29 era compared to kind of what we see today on social media in crypto Twitter. I think there was a much more maturity about the crowd. And it was just more fun back in them days. Nowadays it's just watching some of the events of 2022. You've got, Do Kwon playing Russian roulette with his own projects and really leading people down a false path and destroying so many lives. It's just not nice to see. And then we saw the whole FTX debacle as well. So really, in terms of the size or the seismic effects of what we've seen this year, or well, 2022, unprecedented within the space, and it's very saddening to see so many people lose money. If I'm honest with you, whereas 2017, it wasn't as I would say significantly as anywhere remotely as close to where it is today.
So, what had brought you to pay attention to the macroeconomic environment? Was it your path down 2018, saying the whole like, I'm in it for the tech. This is going to be a revolutionary layer one, and it's kind of ironic that you mentioned layer ones, because over the last few spaces, I've been telling people that the term layer one is just a reused vocabulary word that's been in the industry since like 2016. So was that when you started paying attention to more of like the like the S&P and the Nasdaq, or was this something more recent?
No, so in terms of my journey, 2017, I quit my job to focus, on trading. To be honest with you, 2018 was a very difficult year, and by the end of 2019, by the end of 2018, once Bitcoin hit 3K, we kind of went sideways in January, February of 2019. I decided at that point that there's no way that I can trade, with the capital that I've got, with the skill set that I have. I need to go away. I need to understand how to trade effectively, have a system, and the way in which I did that, I went back to contracting. As a software developer, I was on good money on a day rate, earning $400-500 a day. So it kind of made sense to me. Well, look, I'm not going to force myself to go down the path of trading. Why don't I just take a step back, learn, understand, and appreciate how to trade effectively whilst earning a salary? It was difficult because obviously I'm working a job, but my real focus and passion was on the chart. So it was a real distraction even during my working career. But then just before the COVID crash, it was actually February. I kind of hit the glass ceiling with my career. I'd been doing it for 10 years. I could have continued doing it, but I was on a good salary. But I really wanted to get back into kind of face my own demons and prove to myself that I could trade. And I was fairly confident in the systemization and the skill set that I built, after experienced some significant drawdown in 2018, that I felt I had the right skill set. I was making some great calls and great trades during the time that I had to trade in 2018, 2019, and the early parts of 2020. That I had the conviction to leave. And funnily enough, it was just before the COVID crash, and it was that point onwards where, just by chance, I started watching Real Vision, just paying attention to absorb and understand how to trade global markets, how global markets work, how equities works. I was getting more involved in FX trading as well, and I really had a passion for the bond market because you hear so much about the bond market, like the bond market is the truth, and the bond market is always the one that knows ahead of time. So it's just my curiosity more than anything. I had no desire to trade the bond markets, but I quickly came to understand that you've got market cycles and you've got credit cycles, and the credit cycle is essentially the one which has a massive impact on the economy, on the markets. And if you can master or understand the credit cycle, you're at a huge advantage as an investor or a trader to look for those key turning points in the market. So, it was it wasn't until January, February, March 2020 where I really started paying attention to macro. And then, as you do, it's a logical progression, really. The more you live in that world, the more you surround yourself by, financial Twitter, reading articles. You try to consume, breathe, eat, live that whole space. It kind of becomes part of your life because that's what your passion is, because if you get it right, you can make some good money, whether that's on the way up or on the way down. So I think the takeaway from that is I'm no macro pro, and I don't think you need to be. I think there's a difference, a significant difference between a macro analyst and being a trader. At the end of the day, I still believe that if you have very strong technical skills, you just need to have a fairly decent grasp of the macro to make those good decisions. Whereas if you're a macro analyst, and I've seen it time and time again, you've got some of the best macro analysts, yet they can't trade. They can't put on the position, they get the timing wrong. And that's because, in my opinion, they lack the real skill set in understanding how to manage their risk in those scenarios. So I really do consider myself more of a hybrid. By no means am I a thought leader. In fact, most of my macro content is down to my own research, and the information that I present on my own streams is just an amalgamation of research. And my approach to markets, and especially when I'm doing my YouTube streams, is that I want to present my views in the market, the macro takes, in a digestible way, in a way that I wish I had when I was around in 2017, 2018. I wish there was somebody there that I could look up to, perhaps as a mentor. And I've just used that same approach. Like, okay, if I was to go back 3-4 years ago, what is the type of information that I would want to consume? And that's the type of information that I focused upon relaying out there since, late 2020, 21, 22. And for me, in all honesty, I had so much high conviction that markets were going significantly lower throughout 2022. I was speaking to Brandon in December 21, telling him that I'm 90% in cash. I just can't see how the markets are going to continue going higher. It's not looking good from a credit cycle perspective. Bond yields are starting to rally, dollar starting to rally. This is a real risk-off environment. I think we're in for some serious pain in 2022. And lo and behold, it's actually been very painful in terms of the duration of the bear market. All the way throughout 2022 has just been down. It's really been difficult for crypto traders or crypto investors to fathom the relentlessness that we've just witnessed. And I think, without doubt, I'll just wrap up on this. I think without doubt that we've seen the tight correlations between Bitcoin and global markets. And I think you'd have to be very foolish if you're ignorant towards what's happening out there on a macro perspective. You don't have to be a pro, but half an hour a day, 1 hour a day of your spare time, just understanding, learning what's happening out there, I think will put you in a very good position in 6 to 12 months' time so that you can identify when the key turning points in the market are. Because at the end of the day, you want to be in a position where you've got a bunch of capital. When's the best time to deploy that capital? Not when you think it's the best time, but when the market says the probabilities are in your favor as an investor.
So basically, it's better to arrive late to a party where you know what kind of music's playing rather than just show up to an empty building where you're about to be bulldozed. And you're an individual that likes to trade on narrative, but also technicals. Is that correct? You had mentioned that you're sort of like a hybrid. I haven't really heard really anything from you when it comes to like fundamentals. And I remember back in April, you were like, I think Sandeep, right, the
Yeah.
CEO of Matic, has an early Christmas present for us, and Phantom is about to give us an early Halloween surprise, and other great things that you've showed me, like that short on KNC was absolutely I think it was one of like the best moves that I did during Q2. That was a gem. And I recall when like the CEO was tagging you saying, "Don't fud my bag,"
Yeah, yeah,
and that was hilarious,
yeah.
man. But XL, going back on narratives, when it comes to the crypto market, do you lean more towards like the technical side of things, or more towards narrative? I'm saying this to like the new users here on the space that aren't familiar with your style.
In all honesty, there's a time and place for narratives, and there's a time and place for technicals as well. You just have to understand which narrative takes precedence. Now, in a bear market, in a risk-off environment, it doesn't matter how great the project is or what's going to be released on the project. In a bear market, and we've just seen that in 2022, I saw it in 2018 and 19, that it doesn't really matter what the narratives are. You're fighting against the wind, and it's not, you don't want to be fighting against the wind. You want to be going in that, flowing in that same direction. But in all honesty, in a bull market, if you can stay ahead of the curve in terms of understanding crypto, and people seem to forget some of the successes that I had in 2018, late 2017 and early 2018, when I was pretty much marrying narratives in the altcoin space. Um, you know, it's for that reason. A classic example of that was the trade that I made on Z Classic. It was purely narrative driven because Z Classic in 2017 was forking to Bitcoin private. I got in at $7. I pretty much went all in at that point. I wasn't risking a great deal of capital, but it was still a lot of money to me. But understanding the narrative, it can catch you, can help you catch those big trades. And Z Classic did a 20x or thereabouts thereafter. From I think $7-8 went to $70 and 140, and then it peaked out at 210. So narratives matter in a bull market. Um, and for that reason, I mean, I've not really been talking about crypto narratives so much because I just don't believe we're in that domain just yet. We're not in a risk-on environment, but I think it's important, and that's why I respect people like yourself, because I know that you guys do, especially yourself, you do some real deep research into what will the next narrative be. And I think if you're an investor, right, if you know so much you trade, and I'll honestly say this, I think there is some easy money to be made in crypto, but the problem that people have is holding on to those gains. We saw that in 2017-18. I was a byproduct of that. And then I learned my lesson. And I realized in 21, heading into 2022, that this isn't sustainable. We've just had a massive, ridiculous altcoin rally, market-wide rally, not just in crypto, but in stocks and global markets, and the credit cycle is tightening. So therefore, the narrative has to shift. What is the risk to reward from this point onwards of prices going higher? Or would it make sense for me to, hey, do you know what? I'm going to take the money and run. If the markets drop, great. If they go higher, I don't care. I've made enough money as it is. But if the markets drop, you know what? I'm going to do it all over again. I'm happy to wait 2 years, 3 years, 4 years for the next cycle, because making money in the altcoin space isn't difficult once you catch onto a cycle. It's keeping it that's the difficult part. And I think I learned that from 2018. And I think so many people are now experiencing that in 2022, whereby you've seen at firsthand how much money you can make on the way up, but it's keeping hold of it. So if anybody has done well in 2022 and they're not a trader going into 23, 24, remain patient, because what you're really looking to do is wait for the probabilities to come into your favor. And all you need is 4 or 5 positions, 4 or 5, I wouldn't call them investments, but perhaps more cyclical plays. But the key to that is understanding the narratives. This is where you've got to research, you've got to surround yourself with like minded individuals, but don't be ignorant towards the technicals, because you have to identify at which point is the market overcooked and at which point does it make sense to take some profit off the table, if not all of the profits.
So, and being that you do have more experience than myself, one thing that I like to gauge is, that individual's experience. So, what are some of the similarities and differences that you've noticed between the 2017 run and the prior bull market as well as the bear markets? Do you see differences, or do you see sort of like, it sort of rhymes? History often changes, but the music kind of stays kind of sounds similar. Are there any similarities or differences this time around compared to the earlier cycles?
I think it it's a really loaded question because there's so many different ways I could answer this one. But I'm going to start with the technicals first, and that is what I've seen in 2022 on altcoins was my expectation, um, and that's why I've been hellbent, or I was hellbent on shorting everything lower down. And my tone on Twitter obviously came across as sometimes passive aggressive or being a big perma bear, but it is what it is. And the reason for that is because markets play out geometry, they're quite symmetrical. And you'll see that on altcoins in 2017, 2018. And if you look across many altcoin charts now on the weekly time frame, it just looks like a Christmas tree or a rocket pattern, on the way up and comes all the way back down. That's just the nature of inefficient markets. Markets that have gone up on thin liquidity and there's no demand on the way down because there's an overload of supply and there's nobody willing to step into the market. Everybody's trying to take profits. So that hasn't surprised me. I think what did really surprise me was the fact that how many talking heads or so-called crypto high IQ club and the guys that talked about the fact that DeFi is here to say DeFi is the next evolution, or it's going to be built on top of centralized finance. It's going to democratize finance and all this shit that you saw from Raoul Pal and all the others. I don't really mean to call Raoul Pal out, but I think at the end of the day, they've got to hold some accountability for leading people down a straight path in terms of the vision and the narratives being spun up. And it's unfortunate, in my opinion, that it's just the same rhetorical bullshit that we see time and time again. But yet, markets tend to humble everybody. And I think if I've learned anything, I think 2022 has been a great bullshit filter in the sense where nobody truly knows what they're talking about in this space. It's just all speculation. And for that reason, nothing is really a long-term hold in my opinion. I'm not saying that I'm not a long-term advocate of Bitcoin. I absolutely am. But even then, I'd be foolish if I'm looking to hold Bitcoin, for the next 10 years and just suffering huge drawdowns because of the likes of Plan B calling for 100K by 2022 or 2023, that I'm going to marry that narrative because it's going to make me rich. If you marry that type of narrative, you're asking for trouble. What you should really be asking yourself is, okay, if I made a load of money, at which point am I looking to get out of the market and why? What's the reasoning why? And if I'm wrong on my narrative, where am I looking to get back in? It's all about capital and cash preservation. And if you can do that over a long enough period as an investor, you don't have to be a trader. You're just looking to make a couple of big trades every 2-3 years. That's all you're looking to do. Understand the macro, understand your research, look at what the data is telling you, look at what the potential risk is, have a basic appreciation of technical analysis. Because in my opinion, the best investors or traders have always had a very good technical game or an adequate technical game to help them manage periods of difficulty or periods of high risk environments.
Like so, and what are some things that you'd like to see in the crypto market specifically that would be indicative of a risk-on environment? Meaning, all right, it's time to, I guess, the meme, dollar cost averaging in. What to you would signify um, that, all right, it's time for me to be a bull again? Like, what would make XO turn into a bull? That I think that's a question that I don't think anyone really has the balls to ask, because I know everyone right now is like, all right, we're going into a recession. S&P is going to trend towards 3,000. But outside of like technical levels, what are you looking for, crypto market specifically, for you to be comfortable scaling into spot positions at least?
So I'm going to say this on record. I'm more bullish now than I was a year ago. So
Go.
if anybody thinks I'm bearish, well, the time to be bearish was 12, 14, 15, 16 months ago when the Fed was talking about tapering and rate hikes in August and September 2021. That was the time to be bearish. Notice how the sentiment has shifted now. Everybody's talking about a recession. The majority are talking about lower prices. That's fine. Let them continue talking about lower prices. That's the time when you really want to be looking to buy Bitcoin. So for me, I'm more bullish now than I have been over the last 12 months. However, just because I'm bullish or leaning bullish, that's on a long enough horizon, as in the sense where I'm looking to position for a cyclical play. Now, the key for this is I can be bullish, but I'm being defensive. Defensive in the sense where I know there's some significant risk over the coming months or quarters. Perhaps this isn't quite time for me to fully go back into the market. And for that reason, it doesn't make sense to me, Wabi, you've seen me and I've shared my thoughts throughout 2022 that shorting the market was just a one-way trade all the way down, in my opinion. That's no longer the case because of the stress and the selling of altcoins that we've witnessed. There's really nothing left to short for me, in my opinion. Why would you want to short Solana at $10? What's the point? You could have done that at $200, $150, $100. If anything, isn't it better if you're a believer in Solana, if the fundamentals are okay and they kind of come through this storm, or if they can weather the current storm, then should you not be looking at the network growth, the network effects, the development community on Solana, and then start saying to yourself, okay, what's a good time, or when is a good time to buy Solana, at what prices? What's your strategy? Is it a dollar cost average strategy? Is it moving averages crossover where we get a golden cross on the daily or the 3-day or the weekly chart to show bullish momentum? And even then, once you do buy in, how long are you looking to hold on to that position? Because don't turn around and say to me that you're looking to hold Solana for the next 10 years. You should only be taking it from a month to month, week by week basis, because you've got to understand when the key pivotal turning points are in the market. So, long story short, you asked me a question: when am I bullish? It's very, very simple for me. In all honesty, there's several factors that I look at from a macro perspective, and if I had to pick my top 3 macro indicators, the first one would have to be the PMIs. The manufacturing PMI, historically, when we look at it time and time again, always bottoms around about 30 to 35 on the chart, historically almost marking the bottom of a recession, almost marking the bottom of the equity market, SP 500. There's a very nice correlation there. So when you look at the PMI in terms of where it is today, it's still trending to the downside. It's still hovering around about the 50 level. Now remember, once PMIs trade below the 50 level, that's considered to be an economic contraction. And there's a very simple formula when we think about investing. We've got something called the growth cycle, right? And the growth cycle is a risk on environment. And what the growth cycle basically is essentially inflation, CPI, GDP, combined with the Fed monetary and fiscal policy. When you look at GDP is in a decline. If you look at inflation, yes, inflation was high, but inflation is also declining slowly. And when you look at the Fed's monetary policy, they've been hiking rates, and they're not looking to cut rates anytime soon. So that tells you, in terms of the probabilities, that the growth cycle is likely to continue trending down in 2023. Yes, we may get an odd month of relief and some positive news, but we have to understand the bigger directional trend is to the downside. So for me, it's looking at the PMIs, number one. The second aspect that I'd like to see from a credit market, from a rates perspective, is when you look at the yield curve. The yield curve leads the PMIs by 6 to 9 months. Now, we clearly know that if we look across the various tenors and the yield curves, that yield curves are quite fairly inverted in depth and duration. So the first signs that I need to see is the yield curves come out of inversion. Now, just because if they come out of inversion doesn't mean it's time to go risk on. It's just the first stages that I believe heading into recession shows that we could potentially see some form of turnaround in the next 6 to 12 months once that happens. The third aspect for me is, again, when you look at the credit market. Now, we've seen so much speculation on the bonds and people trying to buy bonds throughout 2022 and getting absolutely destroyed. Well, historically, if you look at every single recession that we've had during a period of high rate hikes, the recession time length has been fairly extended. There's a time where we go into recession during periods of growth, and there's a time when we go into recession during periods of high inflation. Nothing kills inflation like a recession. So ultimately, what I'm looking for is a shift in the rates policy, the fiscal policy, and even then, when the Fed does make those changes, people have to remember it takes time for that to cascade into the economy. Now, the caveat to that is markets are forward-looking by 6 to 12 months. So, effectively, when we do see the Fed start cutting rates, I suspect the bond market will rally. The question is, will equities rally? Historically, we know that's not the case. Historically, equities rally when growth is inclining or growth is on the increase, but right now growth is on a decline. So they're the kind of the three core indicators that I'm particularly focusing on, along with the housing market as well. And obviously, I still don't believe we're in a recession yet because, again, it's very well documented. If you look at unemployment levels in the US and other parts of the global, especially in Europe, the economy is still, unemployment is still fairly tight. It's still fairly low. So I'd like to see some drastic shift to suggest that there's a real supply crisis in the markets. But I'm going to conclude with the fact that I think there are certain factors out there in the market that give me concern. And I haven't got a clue, and I don't truly think anybody has a clue what's going to happen next. And that is the China reopening. We've seen China reopen. Now, once again, we're seeing two sides to the story that China reopening could help stimulate the economy, could help stimulate global growth. But if China is going through a period of high COVID cases, they're going to lay off staff, they're going to lay off workers. Ports are going to have to get closed down, or the number of staff available aren't there. Are we going to see another supply chain bottleneck in 2023 heading into 2024? Are we going to see another global pandemic? Are we going to see a continuation of war? So there's a lot of global threats. There's many global threats that still persist or could persist, which could reignite inflation once again. So we can't rule out that probability. And for that reason, I think it makes sense that you have to be very, very tactful as an investor, where what we saw over the last decade, where you could just buy stocks and sit on them, watch them go up, I don't think we're in that environment anymore. If you look at the 1970s, if you look at the periods before that, there were very, very volatile periods where your return on equity over a decade wasn't fantastic, as what we've seen over the last 10, 15 years. So really, it's more of, I think we're going to see mini cycles within a bigger cycle. And again, I can relate to that on Bitcoin. I do believe at some point in 2023, we will see a significant rally. But I don't, and again, I don't know. I don't know what's going to happen, but I don't suspect that will be the trigger for the next big cycle on Bitcoin. I think we could go through a multi-year range, and that range could be anywhere between $8,000 to $40,000. And I think as a trader, that's what you're looking for. You're looking for that volatility. You're looking for the opportunity to trade in a liquid market, in a volatile market. But as an investor, it's going to be really, really painful because you're having to sit on your hands. If you buy Bitcoin at 10K, you watch it go to 30K, and then 1 year later, it's all the way back at $12,000, $14,000. How do you mentally cope with that is the question. Are you prepared to cope with that? Or do you want to hedge, or do you want to take profits? And taking profit is a form of hedging as well. So I think, in all honesty, if you're new to this space and you've got very limited trading experience, don't be foolish and try to trade large amounts of your capital. You're going to get blown out the waters. If anything, have an appreciation for the macro game, continue researching good projects out there. And when the momentum comes in your direction where you can long the market, buy altcoin projects, buy Bitcoin, gain some exposure on the way up, use risk management on the way down, whether you want to take profits or whether you want to open up an options play to get cover to the downside, or whether you want to just de-risk, hold your Bitcoin holdings, but you want to open up a leverage short, 1x leverage short, which so essentially you're looking to be delta neutral. So you're not suffering any drawdown whilst maintaining or locking in your profits without really physically having to sell your Bitcoin. Altcoins, I wouldn't suggest holding onto them for the next 5-10 years unless you find the next BNB. And I say BNB because I bought BNB at 16 cents and had 20,000 BNB. Had I held on to those today, it probably would have been worth $5-10 million. So there you go. There are some projects that are an exception that will help you become a millionaire, but unfortunately, I sold all my BNB at $1.20. I'm sure there's many such cases and many such stories in the crypto space where people found a real gem and sold too early. But hey, that's the nature of the game that we're in.
XO, and speaking of rate cuts, Greenspan, when he started doing rate cuts, oddly enough, the S&P from the decline from that top, it's roughly where we are today at 3,800, right? So when do you think those rate cuts do occur? Do you think it'll be drawn out as it usually is? Or do you think the market will act as it has over the last few years, where it's like, oh my goodness, this bad thing is happening. I'm just gonna sell everything, and you end up having a few circuit breaker events and potentially triggering another event in the crypto market. I know there's the the whole situation with Gemini and Grayscale. Do you think when that happens, that's something to at least mark a multi-month bottom in crypto? So say like the Fed does start cutting rates, usually the drawdown that falls afterwards. There's always some sort of cataclysmic event. Do you think that could be something that we could witness, or do you think, all right, this time's not different, we're just gonna trend downwards for another year? Because that's typically like the amount of time that all that takes into effect in the market. So my question to you is regarding crypto specifically. Do you think crypto is going to follow the equity market, just kind of dragging on there, or do you think it's just going to shit the bed, just like it did in late 2018 or in the COVID crash?
I think with COVID, Wabi, with what we saw in 2020, was an event-driven shock across all markets. This isn't event-driven. This is more structural. It's been engineered to an extent through controlling rates, through trying to get a grip on inflation. We've not really seen any huge black swan event. I mean, yes, we have in crypto with the Luna debacle and the FTX debacle, but nothing that's really been induced by global markets. Your question is credit markets. Once they start cutting rates, we know historically markets take another leg down. I think, in all honesty, as a trader, you can't marry a bias, you can't marry an expectation. I think you just have to weigh up the probabilities and look at the bigger context of what's ahead of you. From an investment perspective, you're asking yourself, is this the best time to trade? Is this the best time to gain exposure? I'm not too sure. I'd have to see something significantly different in the market to believe that crypto can decorrelate from global markets. And I don't think that's going to be the case, because we have to appreciate markets are driven by liquidity, all markets. Okay. Ever since 2009, liquidity has been a key driver of markets, and that's based upon low rates. Now, if the Fed hike rates to, say, 4.5%, 5%, according to the Fed's future fund rates, right? Even if they start cutting rate hikes, how much can they cut by in 2023? What's the best case scenario? Say in the third quarter they start cutting rates, they'll start off with a 25 or a 50, another 50, and then another 50. So you're looking at anywhere between 125 to 150 basis point rate cuts, best case scenario, in Q3, which still takes you down to around about the 3% mark. That's still fairly elevated from a base rate and an interest rate perspective, and still yields are fairly decently priced at that point. So I think it could be a case where this really is going to be long drawn out. I don't think we're going to see any suspected quick V reversal in the market. That's not ruling out bear market rallies, I should say, of 20, 30, 40%. We know that can happen. Why can that happen? Well, liquidity is thinner across the board, not just in crypto, but global markets. And when that is the case, you tend to find these exaggerated moves to the upside, and then they lose momentum, and then the shift continues back down again. So I don't know what to expect, is my honest answer. I don't really have a view, but all I can tell you is it doesn't really matter to me, because my strengths lie in technical price action. And the reason why I put so much emphasis on technical price action, because it tells me where I'm invalidated and where price is likely to go next based upon the macro narrative. So the macro gives me a bigger picture or a bigger high time frame context where price could go. But even though the macro narrative could be bearish, what's to say price can't rally 10, 20, 30, 40%? Of course I want to catch that move. So it's about being fluid. And I think those that have really got caught up in the market married a bias. And marrying in biases doesn't make you successful as a trader or an investor. You've really got to be willing to adapt to market environments and the conditions out there, as well as the charts. It's a combination. And again, I come back to that keyword. It's about being a hybrid, having an appreciation for macro, but also having an appreciation for technicals. And again, with the rate cuts, my view is that I think we could still see continued depreciation in prices, given the fact that it's well documented that we could see an earnings recession with PE compression. Generally, when that does happen, we see equities take another leg lower down. And so for that reason, I still do believe that, all right, look, Bitcoin at 16K isn't a bad price, but do you really want to risk the possibility of taking a 50% drawdown, assuming that you go all in at Bitcoin here and it could be at $10,000 in the next 6 months? No, thank you. But if one was to buy Bitcoin around about $16,000 and we lose something, we lose a level of, say, 15K, and you cut your trade or you cut your full back, fine. I think that is so much better. That is a much more effective way and efficient way of protecting your capital. That, okay, you took a chance of buying Bitcoin at 16K, with your savings. You're wrong below 15K. Get out of the markets, because what that tells you is that the risk is that we could go down to 12,000, 10,000. Guess what? You're going to get more Bitcoin out for your money. You took a small scratch on the first attempt. That's fine. You've now got the possibility to accrue more Bitcoin. Or you cut it below 15K and you wait for price to reclaim or get back above 15K before you can start saying to yourself, okay, maybe I can start buying back into the market now because we have a new low. Maybe that's going to be my invalidation and I'm going to give this another crack and I can start dollar cost averaging in. But if we lose that level again, I have to get out, because now the probability is that I've had one attempt, it didn't work. I've had two attempts, 15K should have held on the second time, it isn't holding. This is a real risk now that we could see some significant downside. So that is just a base level of how you can apply basic technicals with the macro picture instead of buying a dollar cost average into a downtrend where you're buying at 16K, 15K, 14, 13, 12, 11. What do you then do if Bitcoin reaches 10K and then we have the systemic event or a black swan event which flushes Bitcoin all the way down to 6K? Are you going to be able to stomach that? I don't think many people would. I think most people would puke their Bitcoin. And that's essentially what the market is designed to do, is to cause maximum pain when you least expect it. And it catches many people off guard. And once we see like backwardation and future prices, like significant backwardation on future prices, that's generally what I look for in terms of a bottoming or a local bottom at least.
And speaking of the stomach, the great Peter Lynch had often said that the greatest ability that an investor needs to have is a strong stomach. And an event like that is something where that will be tested, should we test those levels. So, Exo, we've covered some macroeconomic stuff and how you explore that when you're navigating the crypto market. We've touched on technical levels. So the last thing that I want to touch on, right? It's a bit controversial, especially in this stage of the bear market. But what narratives are you looking for the next cycle? In 2017, we had the alternative payment options like Dash, Monero, and XRP kick off, along with the quote unquote ETH killers rallying towards the end. And then 2020, 2021, we saw the fruition of those ICOs, the layer ones come to pass, and DeFi and NFTs and metaverse towards the end. So for you, Trader XO, let's hear it. What are the narratives that you've been exploring during this time period? It could be existing tokens, it could be developing projects, or simple narratives. What are you looking for on a cryptocurrency fundamental basis when it's purely narratives driven?
Yeah.
Like, what's something that you're exploring and entertaining?
I think the first thing is the Ethereum staking prospects. I think the whole Ethereum staking, once that really comes into effect, will have good positive impacts on the market. And I think Ethereum is certainly one of those assets where you can seek to get some good risk reward. So Ethereum is certainly going to be one. Because, staking ETH, you're going to seek a form of yield. I think the second narrative that I look for is, I think the DeFi market will stay around. There will be narratives with DeFi and growth towards CeFi. I think that's certainly going to be a narrative. I don't necessarily play in DeFi pools. I just don't like the risks associated with it and the rug pulls that we saw. I never once went into stablecoin farming or looking for yield in that way. I always felt that in a downtrending market, yeah, you might get 10%, APR or APY or whatever it is, whatever shit you're staking. But in a downtrending market, I'd rather be short in the market because I've got full control. Well, I'd like to think I've got full control, given that any exchanges don't blow up or do an FTX. as opposed to having it staked in a DeFi pool, which is dependent upon you know the risk there is for it to get drained or having it rug pulled or the devs making a mistake. Anything could happen. So there's some real risks that I still have around the DeFi space, and I probably won't be playing in that environment. I think Web3 gaming, for most part, has fallen short of its vision. I think Web3 has received a really bad. Web3 gaming has received a bad reputation. We saw so many trash games come out, so many like 2D animated games that you'd expect on an Atari 1980s, something that you'd play in the 1990s, something that your mum or dad or your grandparents played. And really, is that what gaming is about in Web3? No, thank you. But I do believe that eventually we talk about AAA starred games coming out in the future. They're going to take time to develop. So there could be economy. And I think when you see the likes of Sony getting involved, and you see Meta getting involved in terms of NFTs and metaverses, then yeah, that probably could open up a pathway. Not necessarily into crypto, but I think in terms of adoption of blockchain being incorporated into the mainstream, what does that mean for cryptocurrencies? I'm not too sure. I think 90%, in fact, 98% of these projects don't really need a shitcoin. I think a shitcoin is just a utility for trading to make more money, because at the end of the day, I just think 98% of these projects don't really need a token. It's there for for the purpose of raising capital. Fine, if people can do that, great. Layer 2s, I think, do have an important role to play in terms of interoperability. We've seen Layer 1 protocols undergo core developments in scalability and privacy. I think Layer 2s will support the next wave of consumer-friendly applications. We know the pitfalls of Ethereum. Solana, does Solana really need a Layer 2? No, that's one of the reasons why I do like Solana. I enjoyed what Solana was capable of. I hope Solana makes it through the shit show of FTX and what's been happening, because I think it's great tech. Just because I think it's great tech doesn't necessarily mean that I'm a long-term investor in the token. But if we can get through this cycle of negativity, then sure, I'll probably look to pick up some Solana, because I think it could kick off, given the amounts of money that was thrown into the Solana ecosystem, and the developers that boarded onto the whole platform of building dApps and applications in Solana. And I think Solana works well for gaming and NFTs because it's low cost and high scalability. People talk about Solana falling over and having scalability issues. My argument to that is that's a good problem to have. You look at Cardano. Who's using Cardano? Why is Cardano's network never falling down? Because nobody's using it. Whereas Solana's falling down because people are using it all the time. That's good. That's a form of penetration testing. And what you want to see is high throughput, high usage. You want to see points of failure in a system so they can address those issues. That is a sign of an ecosystem that you want to see evolve and grow. Now, I'm not saying that Solana is going to be around. I'm not shilling Solana. I'm just saying if they can make it through this period, then fair play. Let's see what happens. I might buy some Solana for a cyclical play, and that's it. I'm not a long-term investor. I think really what I'm looking forward to is an increase in tokenized assets, real-world assets, right? Financial primitives that represent a claim on an underlying asset that often produce yield. So a classic example, and it's actually a project idea that I had in my head, not one that I'm looking to execute, but I'm thinking to myself, we've seen all these DeFi projects and Celsius come about and talk about generating yield and fall to shit. Why is there not anybody out there or some firm that's raising capital? You can take 10-year, 20-year, 30-year bond yields on the US Treasuries, on Brazilian Treasuries paying 14%, US is paying 4 or 5%. Why is nobody building products on these solid income streams and bridging it onto DeFi as a way to say, okay, guys, look, you can lock your capital in, you're going to get 3% guaranteed, we'll do all the hard work of investing the money for you across various bond yields across the board, a mixture of high risk, low risk assets, but you'll get 3%, we'll keep 1% plus any fees. So I think there's an opportunity for real world assets. I think that's where we could see some growth, seeing firms take advantage of the high yields across the board and long year yields, like I said, 30-year yields. It'd be interesting to see something built on top of there. And I think NFTs as well. Obviously, I think in NFTs, we've seen 2 cycles of NFTs now. Yes, there's a lot of crap coming out. We saw a lot of crap and junk come out of the NFT space. But again, I think if you look at the mainstream adoption of what NFTs did, for those who couldn't trade, those who couldn't understand what Ethereum was or what Solana was or where to buy it, well, NFTs provided the perfect platform or gateway via the various mediums to purchase NFTs, to trade NFTs. And I think we could see interoperability through social media platforms such as Meta, such as Instagram, where we can see a real use case of NFTs, even for ticketing events and other forms. But again, I don't know how that ties in terms of value accrual outside of collectibles. I'm not too sure. I think NFTs perhaps offer more of a blockchain solution to perhaps ticketing events, or after sought after watches in terms of authenticity. But in terms of usability and collectibles, I'm not too sure yet.
No, you heard it here, guys. Trader XO talking fundamentals and the narratives that he's watching. Finally, after almost a year, I finally got it out of you, brother.
I mean,
as far as
we talk about later too. I'm actually interested to see how Arbitrum and Optimism perform. And then you got Immutable X. So, those are projects that I'd like to see kick on in 23, 24, purely from an investment perspective or a trading perspective. I'm not an investor really, but from a trading perspective, I'm sure it's probably the same case for yourself as well, Wabi, right? I'm assuming you're looking at those key tech stacks.
Yeah, I'm looking at Arbitrum. The only thing with Arbitrum is that, when is it that the Arbit token is going to launch? And if it's the second half of 23, hopefully Q4, I'll be excited to start laddering in a position. It's just a matter of recognizing the risk that I'm taking. And if you look at like other ETH layers that have launched, right? Because I know RB is going to be an airdrop. Potentially have two scenarios, and you have to be prepared for it. It's either gonna mega dump and then rally back to that high like Optimism did, or it's going to be like a Uniswap where the Uni token launches, it rallies, and then dumps back to the lows and then rallies slowly. So the tokenomics for me, that's the most important thing, to be honest, because you can have great marketing and great tech, but if your tokenomics are cucked, then it's just not gonna go anywhere. And I see we're approaching that hour mark, and we have close to 400 listeners. So, guys, if you're enjoying content like this, and you enjoy guests like Trader XO and some other speakers on our panel, feel free to join the Because Bitcoin Discord. I have it pinned up top. There's always great conversation there. We have over 1,000 members now. And if you want to keep up to date whenever we do have spaces, feel free to follow the Because Bitcoin Twitter. We host daily spaces. We have one at 4 p.m. Eastern time, which is usually our boy Carter, who hosts like the macro equity spaces called Market Talk. And then myself, I usually host Crypto World Radio at 7 p.m. Eastern time. But of course, when we do have special guests and there is sort of like a time zone lag difference, they're typically hosted a bit earlier or a bit later. And that's why whenever these rooms do get filled up, I encourage you guys to follow the Because Bitcoin Twitter page and turn on bell notifications so that you can be made awares whenever these special spaces take place. And I see we have Naka with his hand raised up. Feel free, man. It's good to have you here. Add in any statements or any questions to XO, brother. Good to have you here, man.
Thanks. Appreciated hearing from XO. Unfortunately, I missed the beginning of the space. One thing I just wanted to add to XO's point on Solana, roll-ups are bad news for chains that are fast, right? So if you have a chain like Solana or like Aptos or any of these other ones that are kind of like market themselves as being good because they're fast, roll-ups can already be fast, and you don't have to make the sacrifice of less decentralization. So, it could be like if the roll-up thing kicks off, it could be bad for chains like that. But the other thing I just wanted to add is, thanks for, appreciate your time, and would be interested to hear, since I missed it, what you think's going to happen this year macro-wise.
Yeah, I just want to add one more narrative that I think we could see a repeat of, right? And Wabi, I might need you to chip in here or Naka. I'm a bit rusty on my fundamentals, but in terms of Ethereum, okay, let's just assume Ethereum goes on a bull market run in 2024. What happens to the gas prices when Ethereum is trading at $4,000 or $5,000 again, and NFTs and the networks getting absolutely hammered? What happens to the gas fees at that point? Are they going to spike again? Because if they do, my next point is then, well, the Ethereum network is going to become expensive once again if they can't find a solution for that, which I think they're working on. Therefore, you can deduce the fact that, well, people will then start looking to other L1s and L2s, and they will then subsequently rally. Pretty much what we saw in 2021, right? With the other layer ones really rallying late into the bull market cycle.
Yeah, I mean, the idea of roll-ups is they will provide the scaling, right? So you'll have NFTs on Arbitrum instead of on Ethereum. At least that's the theory.
But do you foresee that being rolled out by, say, the end of 2023?
Well, that's the $1 million question, right? There's certainly a lot of stuff that's being worked on. The question of just how long it's going to take, I mean, that's tough.
Yeah.
I mean, look at what they've already got, right? Instead of listening to what they're saying, look at what they're doing. What can you already do on Arbitrum, right? How fast is it already? How cheap is it already? And see how that progresses throughout 2023. There's already a lot of activity on there. The proto dank sharding EIP is going to make rollups faster. But maybe it won't quite be ready. But I mean, the question for you then is, XO, do you think we're actually going to be out of the woods macro-wise by 2024?
I think that's too far out into the horizon for me to even contemplate or consider. I think I say that because I come from a more of a technical background nowadays, so for me it doesn't really make a difference. I think, look, I just think if you're an investor in this space and you're not prepared to take profits aggressively, I think people are going to round trip quite often over the next 2 years. So for that reason, I just can't see a period of where we see sustained growth like we witnessed so soon after coming into what could possibly be one of the worst periods or phases of a recession. We have to remember, right? Very rarely do we ever see consecutive declines year on year in equities, but they seem to happen during periods of the Fed going through phases of rate hikes. It happened in the 20s, it happened in the 40s, it happened in the 70s. And once again, we've seen arguably the most aggressive rate hike cycle by the Fed. I don't think any central bank is rushing to go back to zero rates or very low rates anytime soon because of the risk of a spike in inflation. But I think the way in kind of I envisage markets or what could happen over the next 2-3 years, I think of it like from a mathematics perspective or, layman's term. If you think of a dampening spring or a bouncing ball, right? We saw a period of low rates over a decade, and then we saw a massive spike in inflation and growth, accelerated growth and inflation, especially post-COVID with what was happening. Could it be where over the next several years now we see that bouncing ball effect until governments and central banking policies manage to get a good grip on inflation? So I think we could see periods of, again, I covered it on Friday's stream, ebbs and flows of high inflation, high growth. So I think we could see periods of the reflation trade back into stagflation, reflation, stagflation, deflation. That's where my consensus is. How much weight would I hold upon that? Not much, really, because I honestly haven't got a clue what to expect. So I think it's a decade of uncertainty, or at least 3, 4, 5 years of uncertainty, where as an investor, good luck to you. As a trader, happy days. This is what we live for.
XO, and we have a question from the audience from Crypto Cleve, and he's asking, what would you suggest to begin to find the best places to start deep diving into credit cycles?
Yeah, in all honesty, I think you guys, listen to Because Bitcoin, listen to the various speakers that come on board. That's certainly a starting point. You guys have done a great job. Um, Personally, I think it just helps if you listen or watch perhaps Blockworks. I think Blockworks for me has been my favorite YouTube channel to listen to various thought leaders talk about the markets. Everybody's got differing views in one way, shape, or form or the other. So it's really more about consuming yourself with as much information as possible. But the key thing here is it's not just about consuming as much information as possible, absorbed as much as you possibly can. In my opinion, what's been the differentiating factor for me in helping me trade this market very well throughout 2022 is actually listening to the right people as opposed to talking heads or spinning narratives because they're trying to increase their subscription members, or they want to give out a vision that subscribers want to hear. The bias is buy stocks, buy equities, buy bonds because you can make money. No, I'd rather listen to the realists, but ultimately that comes with experience. And I think those people who have been on point throughout 2022 take note of those individuals and pay close attention to what they say, but not just what they say, backed by data. The data should talk. And if the data talks and makes sense and they can interpret in a way that makes sense to you, then that's probably going to be a good find. So for me, Blockworks, maybe listen to Real Vision with a pinch of salt because you have so many different views on their daily briefing shows. And again, just reading around the internet. And if it helps you, then perhaps subscribe to some paid service. I think there are many good paid services out there. I'm not going to mention any specific one on the show here today. But I think there are some good paid services there that probably cost $50 a month, and they give you a day-to-day briefing as to what's happening out there, or a weekly newsletter as to how they're positioning their portfolio and why and where they see potential risk. So I think at the end of the day, you've got to do your own homework and research, and nobody's going to spoon-feed you. Nobody spoon-fed me. I had to go out there and do my own work and get ahead of the curve. And it's a small price to pay for reaping the rewards, and that's certainly what I've done in 21 and 22, and I'm hopefully looking to do the same in 23 and 24.
Hey, Vestige, if you want to add in something, I know you've been meaning to come up here. Feel free to speak, brother. Good to see you here, man.
Yeah, what's up? So what do you think more about going into some of the exchanges potentially crashing in the new year? Either Genesis, Grayscale stuff. I know Wabi touched on that, but maybe deeper dive into that. What's your play?
Yeah, it's very simple, really. I'm still 95% cash out of the exchanges on Ledger in Treasury bills as a safe haven because banks only insure you up to X amount. So, the key for me is, look, this is where leverage comes in, right? Assume, for example, you've got a $10,000 trading account or a $100,000 trading account. It doesn't necessarily mean that you leave that $10,000 on the exchange or $100,000 on the exchange, because unless you're looking to go all in, that's fine. Good luck. You can buy a token, put it into a ledger or a Trezor, fine. But as a trader, if you're just looking to take trades, you should only really be using the capital that's necessary for your position size. And if you're using correct risk management, where you're risking 5-10% of your capital, there's no need for you to have $100,000. If you're looking to open up like I said, if you've got a $10,000 account and you want to take a $1,000 position, use some leverage, get half the money off the exchange, put it into a cold wallet, de-risk, and once you finish your trade and you're wrapping up for the weekend, get the money off the exchange, pay the $1, $2, $3, $5, $10 fee, whatever it is, get that money off the exchange and put it back in when you're ready to make a trade for the next week or the following day. But any headwinds of risk or contagion, GTFO, just you're not going to make money with your money sat on the exchange, and for that reason, what difference does it make if it's sat on the exchange? Isn't it better to have it on your ledger and just use it as and when? And even then, you've got decentralized options, in terms of DEXs. If you want to execute a trade, well, there's Uniswap, there's other exchanges, decentralized exchanges. I think we're seeing the emergence of DeFi perps, sorry, not DeFi perps, sorry, Dexers offering perps as well. So that's an option as well, where you can, use your ERC20 wallet, hook it up to a Dex with some exposure. If you wish to use leverage, fine, you can do that way as well.
Yeah, no, I agree, man. I think definitely it's safer to have everything on ledger right now or whatever. And I'm probably about 90% cash myself right now as well too, with a little bit left around to play with. But and you're right, if you're trading for the weekly, yeah, take your shit off after and put it away. What's the point of having stuff on exchanges right now? We've seen so much money disappear through exchanges that I feel like a lot of people don't really trust exchanges, and it's probably risky to keep all your stuff on there right now.
Yeah, I agreed. I think until the space becomes heavily regulated, there's no way that I'd have any faith. The only exchange where I think there's some form of, I wouldn't say a regulation, but FDIC insured is Coinbase. But again, that's subjective to what happens if they get hacked or if they get attacked or if they lose their funds. If they go into liquidation, are you covered? I'm not sure you are, to be honest with you. So again, nothing's safe in this space unless it's FDIC insured. And even then, that's only for a limited amount.
XO. About regulation. I have another question from one of our community members. What are your thoughts on the impacts that regulation can have on the how does that look in your eyes?
Sorry, Wabi, you're gonna have to repeat the question. I'm losing you there.
Wabi, you're under the blanket again.
Testing 1 2 3. I'm using my Solana phone. Wait, I know what to do.
Good.
Okay, that's good. All right, are you guys able to hear me? Somebody do an emoji if I'm coming in clear. Okay.
Yeah, you're loud and clear.
All right, good. All right, I'm using my PlayStation phone now. Changed my subscription from Solana to PlayStation. So, XO, the question was, it's from one of our community members. What are your thoughts on the impact that regulation can have in the crypto market? How does that look in your eyes?
I think regulation is positive, not a negative. I think it's look, if we want to see the evolution and adoption of crypto, there's got to be a form of regulation. Otherwise, next cycle we're going to see another Luna, we're going to see another FTX, and we've already seen how the media interprets such events, and you really spins up a narrative to push people away from crypto. That's not how we want to see crypto promoted or the space promoted. So I think regulation brings a sense of responsibility, a sense of governing bodies involved, helps. If their concern is fraudulent activities, then great. I'm all for it. I'm not one of these individuals who believes that money should be decentralized and it's us against the system. I think at the end of the day, if you want to see crypto thrive and be adopted, then it comes at a price, and if that means regulation for adoption, then so be it. But at the end of the day, Bitcoin is still yet a fairly good decentralized money system as far as I'm concerned. But at the end of the day, you have to adhere to regulations, and when you're looking to take a large sum of money in the future, say you've made $1 million in Bitcoin, it's not going to be straightforward just cashing that out. You have to go through the right protocols. Whether you want to buy a property, whether you want to buy real estate, you're still going to get asked, according to KYC and AML, excuse me, where did your funds come from? So you still have to have that level of provability and authenticity. And where is this money coming from? Is it from fraudulent activities, or can you show us a full trace of logs of how you've generated this cash? So does it really matter? I think regulation is a step in the right direction.
So essentially, it's all right. If I'm running an exchange and a new user signs up and he uses one wallet, he essentially has to KYC his MetaMask or his Phantom wallet or his Exodus, et cetera, et cetera. Is that what you're getting to, XO? And
yeah, because why not? Because at the end of the day, okay, we know there's stories of people faking and forging KYC. I'm sure that there's probably going to be ways to circumvent that in the future. But at the end of the day, if you're a hacker, where are you going to send the funds to? You can't send it to an ERC20 wallet unless you create your own wallet or develop your own wallet in Ethereum. But even then, perhaps we could see a protocol being developed which sits as a layer embedded on top of Ethereum or within Ethereum, which prevents transactions from being signed if the authorizer and the authorizee and the prover are not KYC'd. So perhaps we could see the next evolution of crypto having a level of interoperability with security and KYC and AML.
Perfect, man. Perfect. I believe Quant Network is actually working on that. They're going to be the first protocol in crypto to actually implement that and offer quote unquote regulated DeFi. But again, that's a knock on wood.
So it's called the Fed token then, basically. Yeah, we're shorting it.
Well, QNT is actually a beast, man. It's one of the few Fed tokens that I'm actually bullish on. But all right, I see we do have one person requesting to speak. So for the next 10-15 minutes, guys, we'll be taking in requests to come up and speak, give some thoughts or ask some questions. I do want to lay out some rules though. These are the rules, and you guys need to follow them. Number one, no speaking over each other. No obscene profanity. Respect one another. Be a man. Let's respect one another. Let's do better. Let's add value during this bear market. So we're gonna start with Asset Cowboy, and then we'll go with Cleve, and it'll be one by one. Again, no speaking over one another, no obscene profanity, no yelling. Keep it cordial. Let's go. Hey guys, are you able to see Asset Cowboy by any chance? I just proved them.
Happy New Year's, guys. Can you hear me?
Yeah, you're good. You're good.
Wabi, XO. Hope you guys having a great start to your year. Thanks for hosting. Always providing good game and alpha and insight. A lot of people aren't, willing to share from an objective standpoint. So appreciate that. My question is more about a certain large institutional player getting involved in Web3, JP Morgan. As we saw last week, I believe they're rolling out. I mean, they did some. They're doing their own custodial institutional MetaMask, and I think they made like another really big announcement last week, as far as like Web3 adoption. But with some interesting news today that basically they were getting sued in relation to the Epstein human trafficking last week, and then the person that was on that case, the Attorney General, she actually got fired out of nowhere. So curious on your guys' thoughts on that, implications from a perspective and their intentions for Web3.
It's probably not something I'm familiar with, if I'm honest with you, but I think there's a misconception where one thing I will say is people talk about institutions and banks. Yes, there is. I'm sure that we will see institutional money come into the markets, but I think there's a misconception when we see like Goldman Sachs or JP Morgan entering crypto. Well, really, all they're doing is providing a market for their clients more than anything, and of course, they're going to provide a market because they generate revenue from that. So, again, when I hear you look at the mainstream media and talks of investment banks entering into crypto, I don't think it's in the capacity that many people assume. They're not going out there to buy your favorite shitcoin for a start. I think they're just offering like an index of or a basket of markets for their clients to have some exposure to crypto. But I don't think they're essentially outright buying it and putting it on their own books for their own sakes. That's just my 1 cent with regards to investment banks getting involved.
XO, come on, man. You know they're buying up all our AVAX and Matic. Everyone in here knows that payment solutions on AVAX are going to revolutionize the way we buy Snickers bars.
Subnets.
Come on now. Come on now. They're buying up all the AVAX and Matic. Welcome to one of the many inside jokes here at Because Bitcoin. We're fanboys of AVAX, bro. Bullish on Snickers. On Snickers, dude, not AVAX. Bullish on Snickers. But speaking of Because Bitcoin community, we have Crypto Cleve here. What's going on, brother? Good to see you on.
Hey, thanks for having me up. I'm glad you touched on AVAX because who wouldn't be buying Trader Joe coin at JP Morgan? They're
dude. I literally changed my name to Joe.
No, well, I won't hold up too much, but Real quick, I'll throw out a quick fangirl moment here, but no, I think it's just awesome to hop up here with such smart individuals and following Trader XO. Take a quick moment just to shout out and just say that this is kind of just like a Christmas wish list check off, just to get up and just share my thoughts and praise for you, man. I've probably been, I don't know, followed you for about 2 or 3 years now. Didn't take you as serious until about the last year and a half or so. Once I saw you call that May top of 21, and then thought you were just kind of like a shill on Twitter, and then started watching your YouTube videos, and now I can't praise you enough, man. So personal thanks for that. But then just to move on from my showboat, I guess, or not showboat, but the kind of sucking you there for a bit. I'm excited to see. I know you've touched on some tweets, but for the Forex markets, I've mainly played crypto and stocks, and have actually touched on FX this year a little bit due to you and Trader SZ. And I am heavily excited just to see and chase that volatility that you guys are kind of looking for. And I could kind of see a little bit of that myself. And I'm just super excited to see how that plays out over the 2023 year. And I know you mentioned, I think, on like the next video or two that you have coming out, you'll be talking about that. So super stoked on that. But what would be, I guess, some of your favorite pairs to watch? I know you've touched on a couple of the USD pairs with like Euro, USD, GBP, and JPY. Are there others from, I don't know, different currencies besides USD that you're kind of watching for? Or are you more so focused on like the DXY pairs?
Yeah, essentially, two reasons really why I'm really focusing on FX next year. Well, this year, I should say. We're in 2023. Look, I think at the end of the day, personally, having experienced crypto in 2018 and 2019, where we've seen altcoins go sideways in the market for such a long period of time, I suspect, look, we're going to see another phase of altcoins just bleeding away or going sideways. That's not to say that we won't have some form of a mini cycle at some point this year, just like we saw in 2019 with altcoins and Bitcoin. I think that is very much on the cards. But from a trading perspective, is the volatility really there on altcoins across the board on Bitcoin? Not really for me. And the reason why I'm leaning more into FX is because, again, if you look at dollar, purely driven by, well, you can say the first part of the dollar rally was driven by yields and rates, right? And the credit, monetary, and fiscal policy. That eventually, at some point, dollar will top out and roll over. And what we should see is a reversion back to the mean on dollar at some point in 2023, maybe later in 2023, perhaps 2024. And for that reason, I think in terms of the volatility, as a trader, your dream is to trade volatility. You want to be trading volatility. Now, second to that is we know that if, for example, I have a lot of interest in macro drivers, macro fundamentals, then it also makes sense that I'm paying attention to the credit market. I'm paying attention to what various central bank policies are and how they will affect the FX markets, which will then subsequently affect equities and other risk on asset markets. So for me, really, I think we will start visualizing and seeing those moves play out first and foremost in the FX market and the rates market. And for that reason, I think it's just, again, I just see there's more opportunity now in terms of cleaner price action in FX over the next 6 months. If you look at some of the pairs, GBP, USD, pound fell off a cliff when Liz Truss was in charge or whatever her name was, and then pound rallied all the way back up to 124. Where was the volatility in crypto? It wasn't anywhere to be seen. Same on Euro USD. You've seen some great volatility there. So again, I suspect we're going to see more of the same, a continuation of volatility in FX markets for the best part of Q1, Q2. I know FX can be relatively quiet over the summer months, but compared to crypto, I think that's where, as a trader, if you're looking to learn to trade, I think perhaps FX is the best environment. And second to that, you see so much emotional attachment in the crypto space. People are married to their altcoins because they don't know how to short the market. They can't even contemplate the idea of shorting the market. Well, the question for you is, if you're looking at an FX chart, how can you possibly get attached to Euro USD? You know, you will look at the charts more logically and rationally, as opposed to thinking, yeah, I'm going to hold on to Euro USD. Let me put it in my fucking savings account and get 2% yield on that for the next 10 years. That's not going to happen. You're going to look for the volatility to trade it both ways. Why can't you have that mindset and that same attitude towards some of these shitcoins? Except we know that shitcoins are more of a beta asset, When they fall off a cliff, they fall off a cliff. When they rally, they really rally hard. But the key thing is that if you're not very technically skilled in a low liquid market like cryptocurrency, where liquidity is just shot to pieces, so it really doesn't take much in the altcoin space to really get you offside. Or, if you've got poor risk management, you're going to liquidate your account. We just saw Solana move from $8 to $12 in the space of a few days. You're really playing guessing games if you're trying to trade in that type of environment of volatility, unless you've got really, really good risk management. Whereas you've got FX, a very rich liquid market, clean price action in this current environment. Why not play with some FX for the next 6 months to really hone your skills as a trader, then go back into crypto, or perhaps day trade, learn to day trade in FX, but use crypto for more of your high time frame conviction plays, swing plays, where you can build a position in, I don't know, Matic, Arbitrum, AVAX over the next 2-3 months, if you believe it's going to rally. Once it rallies, take your profits in crypto, but keep continuing to trade FX, because the shorting skills and risk management skills that you learn in FX, you can then carry over into the altcoin space. And one thing I will say about the altcoin space, I find that you have so much more time to make a decision as a trader in the altcoin space than perhaps you're doing something like Bitcoin or FX, where you have to really think much more effectively, efficiently, and quicker. I just find crypto altcoin markets are so fucking slow that they're actually really nice to trade. You can go make a coffee, come back, go out for the day, come back, and prices come to your level. Okay, let me long this chart here now. This looks like a good level. A few hours later, eventually it moves away. I just find crypto altcoin in this environment a very slow-paced environment. Whereas as a trader, you're really looking for an intraday play. Maybe you're looking for 2 high-quality setups in a week on FX, and sometimes the moves play out the same day. Your jobs are good, and you're done for the day.
All right, now we have
Definitely. Thanks.
ERZY.
Hello, everyone. Happy New Year. I'm loving the conversation, learning a lot of things, to be honest, and seeing a lot of different perspectives. And to be honest, it's just interesting to listen to. I kind of agree with EXO's view of the next year or so. I think we're definitely due for a volatile year. My bias is probably a volatile year to the downside. We're going to get bounces along the way, of course. And I think that, I think if you're trading and you know what you're doing, I think it's going to be a very profitable year. I mean, everyone's always talking about the bull run to the upside, but what about the bull run to the downside? That's the question. And I think that's what we're seeing now, or what we're going to start seeing now. And it's going to be an interesting year. I think, just to go into the macroeconomics of it all, we spent the last year, people were trying to call the Fed's bluff. And people up until recently were still trying to call the Fed's bluff with them hiking interest rates. I think the past month or so has shown us that they're actually probably quite committed to getting inflation to the target of 2%. And I think we're going to see those effects permeate in 2023. And I'm expecting some sort of market bottom towards the end of 2023 / the start of 2024. But it's interesting because I do expect the crypto markets to sort of bottom before before stability starts to kick in the real world for real people. So we'll see what goes on. But yeah, man, I'm liking everything that I'm hearing on here, and appreciate the space, man. It's awesome. So keep doing it, guys.
Yeah, of course. I think, look, at the end of the day, I think your points are valid, and I've made it very clear. There's some indicators that you look at, right? Which, if you just backtest those indicators, if you look at PMIs, if you look at the yield curve and you overlay it with GDP and inflation metrics, then look at the SP 500, you'll see that there's a very tight correlation there with the bottom or bottoming process. And I think it's not as simple as that, obviously, because to make successful decisions, it's very simple from a macro perspective, right? GDP, inflation is a lagging indicator. Now, you want to be looking at leading indicators. What are leading indicators? Well, PMI data is a leading indicator. You want to be looking at the long-term trend of PMIs as one example. So we know PMIs have been trending down for the last 7, 8, 9 months. Yes, we're going to see blips of a short-term relief in PMIs, but you have to look at the overall macro trend or the high time frame trend. And it's only when we start seeing consecutive metrics showing that the economy is starting to grow, you'll find that there's a very tight correlation with GDP growth, forward-looking indicators, and the ES and equities market and therefore risk on markets. So I think that's really going to be key for me from a risk on perspective. But yeah, I agree. I think in terms of volatility, I think we're in for a great period of volatility across most markets. And you just have to be very tactful in how you trade the markets. Nothing is really an investment for me over the next year or two.
For sure.
So, but again, I keep emphasizing on that, and probably will cover it on my Sunday live stream. I'll show the correlation between PMIs, inflation, GDP, and equities and Bitcoin. And there's even a correlation between real rates. So many people focus on bond yields, right, on the dollar. But again, if you look at real rates, when real rates started trading higher, that was a sign that there's a real cause for a risk-off environment. And we've seen real rates, the 10-year real rates in the US rise to 1.5 or whatever figure it's currently at right now. So there are metrics, there are indicators out there which really give you a head start as to what's happening in the economy. And for that reason, I think it pays to understand credit spreads, credit yields, the bond market, what's happening, because that often leads what's likely to happen next. And again, I'm just going to finish off with one of my favorite books, which I highly recommend anybody to get out there, is called Mastering the Market Cycle. It talks about each phase and what to expect in the market. And in all honesty, from what I've seen, and this is the first time I've traded a recession environment, I've lived through 2 recession environments. 2001, I was young enough to remember that actually. 2008, 2009, I was at university, second time around at university. So, I'm heading towards my late 30s now, so I've seen 2 recessions, but this has been a blessing to trade. But what I will say is that for part and parcel for most of what we've seen, it has been fairly textbook in terms of the sector rotations, in terms of the distress cycle, the credit cycle, what we should see in terms of what happens in the markets. And I think I shared some slides last week or a few weeks ago on my timeline that in the economic cycle, these are the sector rotations that you should see during heading into recession. These are the metrics, or these are the markets, and this is what should happen in a recession. These sectors of this particular market will do X, Y, Z. And I think it's been fairly textbook for 90% of the time.
Can I cut in real quick and just piggyback off of that for 10,
Go ahead, man.
10 seconds? I was actually getting ready to, when I was going to say, like, if we're finishing up, I was going to shout out that book because I remember him tweeting that. And I'm actually, let me see. I have the book right in front of me right now. I'm about, I don't know, 3/4 of the way done. Had planned on finish it in the next week or so. And everything that you read in that book, you can relate to, prior cycles, but I've found it that I've compared so much of, this 2020 to 2022 cycle, and you can reference so much off of that book. And I definitely highly recommend that. I've sent it to like so many friends, and I've talked about it in the, because Bitcoin, but I firsthand, like, I love that book and can't vouch for that enough as well. So it's a huge recommendation, and yeah, I'll piggyback off of that as well. But just to put that in there, it's a hell of a book.
Go ahead.
I was going to send Wabi. Wabi, I'm going to DM you something that I've been using for the best part of a year now. And
Okay.
it's just fascinating. Anybody, I really recommend to print this out and just stick this on a wall somewhere and just relate to what's happened this cycle. Hopefully you should have got it via DM.
I'll check right now. I'll pin it up to the nest.
Yeah. If not, I can tweet you and then you can pin it up if you want.
Yeah, I haven't gotten anything yet, brother. Might be some sort of a lag. Yeah, I haven't gotten it yet.
Yeah, I just wanted to chime in on the whole regulation thing, but going back to the regulation, I think 2023 is going to be the year of regulation. Not saying that it will happen, but it's going to be the year of regulation talk due to the SBF court case, and that's going to go throughout the whole year, probably into 2024. And that will definitely drive a lot of talk around the whole narrative of what's going to happen around regulation in crypto.
I agree, man. I agree on that. I think the whole SBF thing dies this year, though. We have one more speaker, Nana Emo Trader.
Yeah, hi
if you
there.
want to give some statements and some questions, go ahead, brother.
Yeah, sure. It's an anomal trader. Shout out, guys, from Vancouver Island, and thanks again for hosting these kind of events. I think they're critically important. I just wanted to just make a comment. XO made a good point talking about crypto versus FX for opportunity. But I would say, as a professional trader, and I've traded FX, I was trading back in 08 and 09 when things were blowing up. And, you see the pound yen drop like massively 20% in a matter of a few days. But I would say for the retail trader, I think one advantage of crypto is there's less competition. And, there's a lot of big moving parts on the FX space that you kind of got to get right. Whereas on the crypto side, it reacts really well to technicals because of the, basically it's the retail environment that's in there most of the time. And then, it's fairly straightforward. You can pick the strength, you can pick the weakness pretty easy. And I mean, you can get wrecked there too, just as much as you can get wrecked in Forex. But, there's just, the point he made was really good about it. It's just a little bit slower at times, but then, you can, it's the right way. Like, you definitely have to learn how to short, but I find that it's just slower and there's a lot less competition. And really the point I wanted to make, because I'm an active futures trader and I've jumped into crypto heavy in the last 2 years. It just seems to be a little easier and trading's never easy, just for the record. But I just want to make that point, man.
Yeah, I have to second that. I think there's more complexities in FX. There's so many intermarket correlations.
Yep.
There's so many rates decisions. There's non-farm payrolls that come out. So really, if you're jumping into FX, I really should have emphasized on this. So it's a great point that you've made. If you're jumping into FX for the first time, I think it really pays if you subscribe to some service that covers FX with fundamentals. So you truly get a grasp not just as to why or how to trade the markets, but why or what is causing the reaction in the FX markets. Because sometimes a decision made by a central bank policy heading into that event, you might want to be risk off because you don't know what the decision is going to be, and maybe look to play the move thereafter. Same with on non-farm payroll days as well. It's a very dangerous time to trade around those periods if you don't know what you're doing. So I think FX, it definitely does. There's a level of fundamental understanding that you have to have, and purely trading the charts by technicals will only get you so far. But if you're really looking to do well, then certainly 100%. I think you've got to have an appreciation with fundamentals. But I think generally that's the case with any market. Even cryptocurrencies. If you're looking to trade altcoins, I think they are somewhat more easier technically. But there's sometimes fundamental narratives that you can get caught offside very, very quickly. If you're shorting an altcoin and somebody makes an announcement, for example, XYZ is partnering or looking to, I don't know, cut their coin circulation, then you're going to get screwed straight away without risk management.
Yeah, I think the FX markets are definitely a little bit more manipulated and also a little bit more dependent on a whole host of other fundamental factors. So I feel like you have to almost contend with more factors, and the factors are almost weighed differently as well. I think crypto respects technicals a little bit more than the FX markets, in my opinion. Like, you get liquidity grabs as you get liquidity grabs in FX, but the liquidity grabs are a little bit more textbook, a little bit more predictable, and you don't get wiped out as easily if you don't get it right. I think with FX, even though whatever Elliott wave count or however you trade, like XO said, if they announce something, then you're literally screwed. It's back to McDonald's literally. So literally, I think it's definitely something that I personally wouldn't trade FX if I was new personally. I just think that you have to understand a lot more of these fundamental factors at play. So
yeah, you do, you absolutely. And look, by all means, I used to trade FX in 2017-18, and I called it a day because I just found FX so frustrating to trade. The lack of volatility, right? Heading into it wasn't until COVID happened that we really saw some great volatility in FX. I remember dollar falling off a cliff as the Fed really put their foot on the QE accelerator. And now if you look at what's happened with dollar, the market's where you're going to make the most, in my opinion, is in a trended market. 80% of the time, markets are range bound. Look at Bitcoin. Look at what Bitcoin's been doing for the last 3, 4, 5 months. It's just been sideways, one significant move sideways, another significant move. So, and again, when you look back at altcoins, where did you make the most money and where did you lose the most money? It was the trend in markets. It's the shifts in trend. So, when I look at the dollar's been on an absolute relentless trend for the best part of the last year and a half. That eventually, at some point in 2023, maybe 2024, we see a reversion play back to the mean. That's certainly a market that I'd like to trade. But having said that, who knows? Those effects that we see dollar falling off a cliff at some point in the future could be positive for risk on environments again. So, it remains to be seen. But for now, I think my view is that these are very rough waters to trade out there, in all honesty.
100%. I'm looking at the technicals and I'm going to myself, all right, what are the charts telling me? Because in my opinion, I've been traded these markets for quite a long time now. And I'm young, but funnily enough, I've got like 7 years experience in trading, and that's like nearly just under a third of my whole life. So I'm quite young in that sense, but been doing it for quite a while. I'd say from what I've found and what I'm seeing from it is that, I mean, the technicals almost tell you about what the market's going to be and almost what the policy decisions are going to be to a certain extent. I think that price action has a very normal, for the most part, unpredictable way it plays out in general, especially in the crypto markets, and it does follow the technicals. So it's something that I would say is learn the technicals, and the news only kind of just that it only is there to justify what's happening on the charts. So yeah, I think we're going to be in for a rough year, and I think 2024 will start seeing some sort of recovery. I'm not too sure what you think, EXO, but that's my stance on it.
I'll probably make a comment. This is my own view of the market.
Go ahead.
When I think about trading or when I think of technicals, I don't hear many people say this, right? But this is how I view technicals. Quite often, I think there's a misconception, especially in crypto Twitter. Everybody enjoys drawing fancy boxes and arrows, and then if you get price right in the direction of where price went in terms of the arrow, you're a genius. It's not the case at all. As a trader, two things matters, and I'm going to say what I believe is the most important. Technical skills or technical levels help you define your risk more than anything. That's the primary use for me of technicals. It's not about, I think price is going to bounce here and it could go there and I'm going to make some money. No, it tells me at which point am I wrong on the trade. Learn to manage your risk first as a trader. You'll be much better off, as opposed to hoping that the market is going to go in the direction that you want it to. That's what I use technical analysis primarily for. Secondly, technical levels on the chart, right, help me define at which point in the chart am I looking to do business. Anything else I'm not interested in until price comes into my zone, gives me the setup that I need to see, and I have a reasoning as to why I want to pull the trigger here. I have a trigger point, I execute that trade, and then I manage the trade life cycle. That's what technical analysis is for me. Again, we see so many people drawing fancy charts. I think Bitcoin could be 40,000 in 6. That doesn't tell you anything as a trader or an investor. It's not actionable. Actionability is understanding which levels you're looking to trade. But like I said, more importantly, it helps you understand at which point you're wrong in the market and why you're wrong according to your own thesis or your trade setup. Whatever happens after that is up to the market, essentially. That's kind of how I see the markets.
Or I'll finish up, Exo. Finish up.
No, that's it. I was going to say there's two hands up. Sorry.
Perfect, man. Dude, thank you so much, bro, for taking the time out of your day, for joining me here on my space. Guys, if you enjoy spaces like these, feel free to follow the Because Bitcoin Twitter page. And I want to thank all of you guys for joining me up here. We're going to start wrapping up now after Cleve and Nanimo. I don't know how to pronounce your name, dude. I'm sorry, dude. I'm not gonna.
No worries, man.
I'm not gonna force myself. Yeah, but guys, I do have to start training. I have to be at the gym pretty soon. Because outside of crypto, I do like to get absolutely as strong as humanly possible. Instead of being in front of my computer screen 24 hours a day.
Wabi, let's take two more questions and
ahead,
call it a day.
Yeah. We've been running for almost 2 hours here. So we'll go with Cleve. Cleve, I want to thank you, bro. You're one of the most active people from the Because Bitcoin community, and honestly, bro, like it's good to have you up here, bro. I see all your comments in the Discord. So we'll go to Cleve, and then we'll go to the other person.
I appreciate the love, Wabi. No, the last thing I had, I just thought of this because I remember seeing it a little ways ago, but it was the last question for EXO. I don't want to say it's a personal question, but I was just curious to see in like one or two sentences how that trading account and mentoring your nephew has been going. I saw you talk about that about a year and a half ago, and
That's right.
bringing him up as a young guy, and I'm curious to see how that's going. I'm sure he's making leaps and bounds compared to many others out there. So
Yeah, he had a stint, and he's now back at college doing computer science for the next 2 years. But every summer he spends time with me. I try to cover the economics, the technicals with him. So he's doing quite well. I was very, very pleased the fact that he took on board with the information that I presented to him and gave him a very simple system to follow, which at some point he was profitable. But again, when you're playing with small money, it's trading is more about emotions and managing your emotions and managing your risk. So it's difficult to achieve or replicate that environment when you're only trading with $50 or $100 and a lot of your trades are just on a demo account. But I kind of think of like game theory. Like if you're a trader, if you're looking to start out for the first time, don't start off with $10,000 or 5,000. You're going to blow it away. Why don't you just give yourself a challenge, even if it's a demo account? That it's like playing a game. If you're good at gaming and enjoying playing games, why can't you do the same with trading? Start off with $2,000 on a trading account and try to grow it to 10,000 in a systematic way. But before you do that, there's people like myself and other people out there who are giving free information out there on my YouTube streams, how to think about trading, how to create a trading manual, how to have a trading plan, how to create a strategy, how to think about trading. They're all aspects that you need to incorporate into your game before you can go out there and be successful. If you think you're just going to rock up on the charts and start printing money, it's not going to happen. You're probably going to lose a lot of money. You're going to be stressed out. You're going to be emotionally drained. And then eventually you'll sit down and realize, right, I need to actually go about doing this as a business, as a profession. And I have to be more methodical and really thoughtful as to how you're going to trade. And like I said, look, in trading, you don't have to master everything. If you can find one setup that you can repeat consistently time and time and time again with good risk management, that one strategy should be enough for you to be successful.
Let's go. Thank you, EXO. Thank you, man. Nanimo, go ahead, brother.
All right, man. Hey, I just wanted to say thanks again. Yeah, this is definitely a year for trading. I think the concept of just sitting around and you're going to ride that trend all the way up and it's going to win moon for you. This is the year you're going to have to know where you're wrong. EXO made a great point. I mean, that's what the technicals are about, right? Knowing exactly where you're wrong. The other thing is going to be, I think it's also going to be a year of execution. There's going to be a lot of that side where you're going to have to jump in and learn to execute real time. And that's a big thing that a lot of, after a bit, it doesn't take much to start to figure out. In a few months, you can figure out how to read a chart and see what you're doing and where the price action should go and stay on the side that is winning. Or if you're short, you want to be on that side that's losing, shorting them, right? You can just figuring out the context. But after that, get into that execution is where the rubber really meets the road. And that's one of the hardest things that people have to deal with. And I love that point that EXO makes, and I just want to reinforce that to everybody. Just start small. Don't have to come in with thousands of dollars. Come in with $100. Come in with $200 in crypto, Forex, whatever it is you're going to be. And once you're successful with that, then start to scale it up a bit. It's just like any other business. Anyhow, that's it. That's all I had to share. Love what you guys are doing.
Thank you for the kind words and love and support. Thank you, man. It really means a lot to us. So on behalf of myself and because of Bitcoin, I want to thank you, Trader XO, for finding the time out of your day to come up and have some one-on-one time with me. It was great talking, not only fundamentals, but also helping me grow my knowledge in the macroeconomic side of things and also the technical side of things. And brother, let me tell you, I can't wait to be right by to rewrite by you, man, when alt season starts, dude. Hopefully by Mother's Day or Valentine's Day of next year, maybe Christine Lagarde will find it in her kind soul to help us print. And I see he dropped off. I'll bring him back up. It seems like he got booted or something. But yeah, I want to thank you guys for coming up. Thank you, Trader XO, for coming up on here. Thank you to all the speakers, Vestige, Nanimo, BRZ, Cleve, Naka. Thank you all guys so much for sticking around for about 2 hours. If you guys want to catch a replay of this Twitter space, feel free to go on the Because Bitcoin website and click on our sources and go to our YouTube channel. You should find it on the site, and you'll find a replay 5 to 10 minutes after the space is finished. And while you're at it, if you're on the Because Bitcoin site, feel free to check out some of our articles. I know our head author Valentin has just been pumping out articles left and right. And if you enjoy spaces like these that are more of on the crypto specific side, feel free to follow Because Bitcoin Twitter page and turn on bell notifications so that you're made awares of when they do go on. And we also do have other content streams such as Market Talk, which dives more into like the stock market and the equity market side of things. Usually that goes around 4 p.m. Eastern, 4:15 p.m. Eastern time. And we also have a show right around midday, 11 a.m. Market Check, where we have our CEO Max and our boy Premise and also Snorlax. So thanks guys, thank you so much. Thanks Naka, and I hope to see you all here tomorrow. But for now, I'm gonna go train and eat like a beast and have some fun. Have some fun, guys. Take
Hey, man,
care.
good luck squatting 135 tonight on PR.
135, dude. I
You
curl
got
that,
this.
bruh.
You got
With
this.
pre-workout as well. With pre-workout.
Yeah.
Nah, dude. I'm gonna stare at the Bitcoin chart for a pre-workout, dude. Don't you know, dude?
So a different type of pump. I see you. I see you. I see you.
Staring at a $200 range is like the best thing to get motivated. Just
I
look,
mean,
just look at the chart. Be like, why aren't you pumping? You make me
hey,
so angry.
pulling up Stand Deep and Andre tweets
Oh
all last
yeah,
year
dude.
seemed to work well.
Exactly. So yeah, guys. We'll be back. We'll be back with Market Check and Market Talk tomorrow. So feel free to check those out.
Yeah.
If you're coming in here and this is the first time that you see Because of Bitcoin, and you're tuning into this crypto specific space, we also do cater to the overall financial markets. So feel free to check those out. We'll be back tomorrow, 11 a.m. Eastern time on our YouTube channel, then Market Talk here on Twitter Space, and then myself at 7 p.m. Eastern time. So thanks, guys. Thank you all so much. Take care. God bless you. Thank you all for showing up, showing love and support. I appreciate every single one of you. And shout out to some of our BB Chads, TB, and Mr. Kimchi. So I'll see you all later. Take care, and God
Awesome.
bless you.
Later, guys.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000. Depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.